Despite countless talks and targets, the energy transition has been a slow burn. But as geopolitical pressures continue to push energy security up governmental agendas, is the renewable energy sector about to spark into life?
What we have seen over the last few years is that investments in renewable energy have led to multiples which are clearly above what you see in transactions of different assets, but with comparable risk profiles. This is due in a great extent to the ESG concerns of the investment community.
The strong valuation of renewables has also attracted oil and gas, with firms across the sector signing a record $32 billion worth of clean energy deals in 2022, 15% of the sector's total deal value. Meanwhile, governments around the world are adding fuel to the fire, rolling out record subsidy packages.
In the US, the way that the government has done it for several years is through tax credits. So depending on the amount of kilowatts that you produce, you will be getting basically dollar amounts that are tax credits.
The EU, meanwhile, has relaxed rules on member states looking to incentivize the energy transition. No wonder it's such a hot topic. But what do companies sizing up deals in the sector need to know?
The three main challenges right now have to do with interconnection. We haven't seen enough investment in that side, and also on storage. It has to do with supply chain disruption, but it also has to do with pressures from governments for an inshoring of manufacturing, and that has led to hike in cost, volatility in cost, and also substantial delays in materials production. And finally, finance. The hike in interest rates, together with the two aspects I just mentioned, has led for banks to be much more conservative when sizing debt.
If buyers can raise funds at a reasonable cost, then searching for gaps in the energy transition could reveal value opportunities. But before rushing towards a deal, buyers need to be aware of the legal specifications.
Securing the land may be a problem in some jurisdictions where just by the mere fact that you're buying land, you need to go through a review of being a foreign investor, or sometimes it will require you to have a local representative owning the land together with you. In the US, many large pieces of land are owned by different landowners, and you need to reach an agreement with each of them.
Buyers also need to make sure that the way they are compensated for an asset producing, storing, or transmitting energy is enshrined in local law.
We've seen in some cases that governments have changed their minds, so there will be disputes, and these will be sovereign disputes against, the host government that promised a certain rate of return.
European companies may also face multi-year permitting delays. However, new EU laws set to speed up the regulatory process may see this change. A lack of consensus in the US, meanwhile, may mean some buyers look past the giant subsidies in favor of jurisdictions offering legal certainty. As pressure mounts on companies to reduce their carbon footprint, more buyers will enter the market. US tech giants are already the biggest buyers of clean energy, and many see M&A as a cost-effective path to energy security.